One of the hottest stocks on social media is none other than AMD. However, over the last 6 months, the stock price has fallen by over 32%. And a lot of the optimism around AMD's stock price comes from the potential growth that they have in front of them in their data center segment. Last quarter, it grew by 69% year over year. However, that does not paint the full picture. What we are going to do in today's video, we are going to take a look at projections for AMD's net income over the next couple of years and see whether those projections are realistic compared to the past growth we have seen from AMD. And we're going to leave off with a couple of risk factors to consider before investing into this company. And all I ask in return is if you enjoy the video, drop a like down below. It really helps the channel out. And while you're down there, if you want to catch more videos like this one, make sure to subscribe. Before we get into AMD, I want to make sure that I am transparent with you guys about the positions that I hold in the market. This is the YouTube portfolio. It's currently sitting at a value of $60,398.45. And personally, I do not own any AMD stock across any of my portfolios. Within the YouTube portfolio specifically, we hold Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, Supermicrocomputer, and Visa. And my most recent moves into the market have been around Google and Microsoft. Microsoft is currently up around 11.6%. However, Google is down 2.7%. If we see Google continue to move down, I will definitely be adding more shares to the portfolio. And we definitely have the cash to build out this position a little bit further. We are currently sitting on $9,206.90. However, if we need to add more cash to this cash position, what I plan to do is sell out of SCHD. At some point here, probably over the next month, I will exit this position. That will help me build up my cash. And if we see the market continue to drop, then I will be able to deploy that cash into individual stocks. And one of the companies that I could look to deploy some cash into is none other than AMD. Over the last 6 months, this stock is down 32%. And over the last year, it's down over 40%. Over the last 5 years, we have seen some volatility throughout AMD. It's gone on monster runs as well as crazy dips. And what we are seeing right now is a massive dip. The stock back in March of 2024 was trading over $200 per share. However, today it is down almost 50% from that all-time high. However, there's no denying that AMD should trade at a slightly higher valuation compared to the broader market due to the fact that they are growing much quicker than most companies out there. Their data center revenue grew by 69% year over year in their most recent quarter. And their total revenue in fiscal 24 grew by 14% year over year to $25.8 billion. Oftentimes in the short term, top line growth determines valuation of a company. However, over the long term, what investors want to see is strong bottom line growth. When we look at AMD's 2024 numbers, they put up a non-GAAP net income of $5.4 billion. And this is where questions start to creep in around AMD because their bottom line over the last 3 years has basically been flat. They put up $5.5 billion of non-GAAP net income in 2022. That dropped to $4.3 billion in 2023 and then jumped back up to 5.4 in 2024. However, if we zoom out a little bit further, back to 2020, their non-GAAP net income was sitting at $1.58 billion. That means over the last 5 years, they have grown their non-GAAP net income by around 36%. However, basically all of that 36% growth came over 2020 through till 2022, with no growth occurring over the last 3 years. And right now, analysts have this changing over the next couple of years. In 2025, they are expecting that AMD will be able to grow their non-GAAP net income by 41% to $4.67 per share. Then in 2026, they're expecting that the company will continue that growth, growing their non-GAAP net income by 34% to $6.25 of EPS. And there's no question that if AMD is able to put up these types of growth numbers, the stock price will go up. Net income in 2025, if we see that 41% growth, would be around $7.6 billion. And then in 2026, with 34% growth, that would result in $10.2 billion. I even projected that in 2027, we could see that slow down a little bit further to around 28% growth growth year over year to $13.1 billion. These numbers would result in $4.67 of EPS in 2025, $6.25 of EPS in 2026, and then $8.01 of EPS in 2027. If we assume that AMD should be trading at a forward P ratio of around a 25, that would put a fair value for this stock of around $116, almost $117 per share. That means that in 2025, based off 2026 EPS numbers, a fair value for the stock would be $156 per share. And then in 2026, based off 2027 EPS numbers, a fair value for the stock would be $200 per share. And likely these moves in the stock price would result in market-beating returns over the next couple of years. A compound annual growth rate for 2025 of 47% and then 37% in 2026. What you need to ask yourself if you're either invested into AMD or looking to invest into the company is whether or not you believe these growth rates are real and could potentially occur over the next couple of years. This is what the chart for their non-GAAP net income would look like over the next 3 years. Again, we have the data for 2024, obviously 2023 and 2022. We've seen their net income basically go flat over this time period. Over the next 3 years, analysts are projecting a massive move upward in this metric. The other thing that you really need to see from AMD over the next couple of years is them stealing market share away from Nvidia. Right now, Nvidia is only trading at a forward P ratio of a 26.25, and they are definitively the #1 player in the data center market. And the problem is that so far, AMD has shown that they have not been able to steal market share away from Nvidia. As of their most recent quarter, AMD grew their top line data center revenue by 69%. Nvidia is growing their data center revenue by 93% year over year. And Nvidia is able to put up these higher growth rates despite the fact that they are comping against much higher revenue numbers. And it's not like strong bottom line growth is only being priced in for AMD. If we look at Nvidia's projections, they are expected to grow 51% in terms of their bottom line this year. And then next year, analysts have them growing 27%. The big difference between AMD and Nvidia is investors have a little bit more confidence in Nvidia hitting their numbers. This is because they are the #1 player in this market. And as we saw, they have put up better growth and are maintaining stronger market share than AMD. What we can see from their numbers is their net income is projected to go from around $74.3 billion to potentially $164.1 billion in 2027. That's assuming 51% growth in 2025, 27% growth in 2026, and then 15% growth in 2027. And because there's a little bit more confidence in Nvidia being able to hit these numbers, investors have priced this into the stock. What we can see, if Nvidia were trading at a 25 forward P ratio, that would put a fair value currently of around $113 per share. In 2025, that would put their fair value around $144 per share, and then in 2026, a fair value of $165 per share. If these projections worked out over the next couple of years, that would result in a compound annual growth rate of 22% in 2025 and 18% in 2026. These are about half that of what we saw earlier from AMD. When I look at AMD and Nvidia, I think there's one other thing that investors need to consider. If we see a downturn in the data center market, how will that affect these two companies? If you look at Nvidia, they are the #1 player in this market. They have a massive percentage of their revenue coming from data centers. That means if we see any sort of downturn, Nvidia will likely get hit a lot worse than AMD. So AMD is actually a little more hedged, a little more diversified than Nvidia in terms of their top line numbers. And you're getting a higher potential return for AMD in the future. So right now, I don't own shares of this company. I think if it were to dip significantly, I would have to be a net buyer because this does have a very interesting story going forward. But keep in mind, don't buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you give a scientist with bad breath? Check the comments down below for the answer. Thanks for watching.